So you're ready to invest. How do you invest? What do you do? Well, first you need a brokerage account. A brokerage account is an account in which you can put money into. You can funnel money from your checking account, savings account into this account, and then you can place stock trades for it. Okay? So think of it as a bank account, but it's a bank account that you can place stock market trades. You can't do that in your regular Chase account or your regular Bank of America account or Wells Fargo or something like that. But you can do that if you have a brokerage account with, say, Fidelity Investments, TD Ameritrade, Scottrade, E-Trade, the Robinhood app. There's a lot of different platforms out there. Which one is best for you? I don't know. I'll be honest. I've used a ton of them over the years. The one I use more than anything is a company named Fidelity Investments. They're not sponsoring this program. I'm in no way affiliated with Fidelity Investments, but I have used them the majority of my investing career, and they have treated me phenomenally. I can call them up at 2 in the morning if I want and discuss with somebody live on the phone about a trade or this or that, whatever situation, or something's wrong with my account. I can discuss that anytime, and it's no problem. And just the way they've treated me over the years has been great. I've never had an issue. Never had an issue in probably 8 or 9 years of being with them. Ever. So that's a pretty dang good thing. But there's also apps like Robinhood, which actually do not charge you for making a trade. So that might be something good if you're kind of a beginner investor. But I mean, I've heard that for more advanced investors, something like Robinhood maybe isn't as good. So you may want to go with a TD Ameritrade or Fidelity or something like that, guys. So, kind of research into them, see which one's the best. I can just tell you from my personal experience, the one I go to, the one the one I use more than anything is Fidelity Investments. Now, how do you sell a stock? Whenever you go to buy a stock, well, first off, it has a ticker symbol. And if you've been in the markets for a little while and you're watching this, you might want to fast forward or something to go to the next part, because this might be a little boring for you, but I just want to make sure everybody understands, how to actually buy and literally sell a stock. So a stock has a ticker symbol. So let's say you want to buy some Apple stock. You've looked into Apple stock, you've done everything we talk about in this program, and you want to buy some Apple shares. Well, Apple stock ticker symbol, I just know it off the top of my head, is AAPL. So AAPL. So if you want to buy shares in Apple stock, you need to go ahead, you need to click buy with your order type. So order type buy, and then however many shares you want to buy of Apple stock, you hit in the ticker symbol AAPL. How many shares do you want to buy? Do you want to buy 10 shares, 100 shares, a million shares, 5 shares? It doesn't matter. You can buy as many shares as you want. You just can't buy them in fractions. So you need to buy, either an odd amount or an even amount. You can buy 1 share, 2 share, 3 share. It doesn't matter. You just can't buy like 1.4 shares or something like that. So you put that in. Then you can do it as market order. What a market order basically means is whatever price Apple is trading at that time, that's what you're going to get your shares for. So if Apple's trading for $160 a share at that moment, that's what you're going to get your shares for. That is what it's going to trade at, $160. That's what you'll buy them at. And then obviously you got to pay your commission, which it depends on which brokerage you're with. Some don't charge any commission, some do charge a commission. I can tell you with Fidelity currently, they charge like $4.95 commission, and that's total. So it doesn't matter if I buy 1 share of Apple, I buy 1,000,000 shares of Apple. They're charging me that $4.95 no matter what. So you can do a market order, they'll just trade at that, or you can do what's called a limit order. The limit order will not let it go above a certain price. So this is good if you're buying a stock that's making a big move at that moment. Like this stock just happens to be going up really fast or down really fast. You can do what's called a limit order, and say Apple stock's going high. It was just at 158. Now it's at 159. You could put in a limit order at 160. So then if it jumps to 161, you won't buy it at 161 if that's what you want to do. Now, mostly you don't want to really be messing around with a stock that's making a huge move like that unless you're a short-term trader. I'm not. We'll talk about why I'm not a short-term trader, why I'm a long-term investor, but you can definitely do limit order and get it whatever price you want. Now, personally, I just mostly do market orders because if I get the shares for 2 cents cheaper or 2 cents more, it doesn't matter to me. I'm in this for the long game. And once again, we'll talk in the next chapter about why I'm a modern long-term investor. I'm in this for a long-term game. If 2 cents difference or 1 cent difference up or down is going to make or break me, then I shouldn't be investing in that stock, because I'm investing in the stock hoping to make huge gains on this, not like a few pennies, guys. So I usually just do a market order, and I usually place my order when the market's already open. So it's not like I place it the night before, and then who knows what happens with that stock. In the meantime, maybe it shoots up and I have to buy shares way more expensive. I like to buy it when the market is actually open. And that's another part. You have to buy shares when the market's open, unless you have something like an after-hours trading account, which I do not recommend unless you're a super advanced investor. You should not be buying and selling shares in the aftermarket or the pre-market unless you've been in the market for a long, long time. So don't even mess with that. Just have your regular account. Make trades during the actual trading day. If you live on the East Coast, the stock market opens at 9:30 a.m. and the stock market closes at 4 p.m. in the afternoon. If you live on the West Coast like I do in Vegas, then the market actually opens at 6:30 a.m. and it closes at 1 p.m. So that's when you really want to be making your trades during that time. So for the most part, I go with Fidelity Investments. I do buy orders. When I'm placing my buy orders, I usually do market order for whatever price is trading at that time, because I like it at whatever price it's trading at. Now, as far as if you're doing a sell order, you're basically going to do pretty much the same exact thing, except now you'll hit sell, and you can choose how many shares you want to sell. If you just want to sell all your shares, you can usually click a tab that says sell all shares, which means it will sell all your shares you have in that particular account for that particular stock. So if you have 10 Apple shares and you you click sell all shares, it's going to sell all 10 of those Apple shares. Or you can just sell 5 if you want, or something like that, and you just click sell 5 shares. Then you can do the same way. You can do a market order, so it trades at whatever the stock's trading at that particular time. That's what it's going to go through at. Or you can do a limit order on that, and so,